Welcome everyone to episode 2 of Following the Money, a technical trader's outlook. First, I have a disclaimer. The views, opinions, and analysis expressed in this video are solely for informational and educational purposes. They do not constitute financial advice or recommendations to buy, sell, or hold any securities mentioned. Trading the financial markets involves risk. Viewers are encouraged to perform their own due diligence and consider their risk tolerance before making any investment decisions. The author and publisher of this video will not be liable for any errors, omissions, or losses arising from the use of information provided today. Similar to last week, I want to start with US bonds. We can see the 2-year yield is down quite significantly, and if I were to go to a 30-year, a longer dated bond, it's actually up. Only slightly, but it is up. 2-year bonds are more sensitive to changes in expectations for short-term interest rates. Now, given the PPI was quite soft, it was released on Friday, I would say the market is expecting an interest rate cut in March. Given the price action of stocks as well, that would coincide with that. If we don't get that cut in March, well, this big bull market that you're having, what's going to happen? That's likely going to pull back quite significantly. That's why I always like to watch bonds. I certainly don't trade any bonds, I don't hold any bonds, but I watch this because the people that do trade it tend to be more sophisticated, so it does give keys as to where stock markets may head to next. I've got SMCI on the chart now, super microcomputer. Like I mentioned last week, it's broken out of resistance here. I didn't trade this because it didn't form much of a pivot point for me to actually get in with a nice risk reward ratio. But what we're actually seeing now after this breakout, it's forming a high tight flag. If I go down to a smaller time frame, look at this. So I will be watching this one closely. It's likely it's going to retrace down to this previous resistance area. So this was a previous distribution area. We'll see if demand starts to kick in after it's breaking through that. That's typically how I see markets working. So should we get a retest of that, demand comes back in and a breakout, I will be looking to potentially trade this one. Next, I have LRCX, Land Research Corporation. Very similar to SMCI, it's broken out of a key resistance area. Here was a very nice pivot point to trade. Look at this RSI rating, 94. This is clearly a leader of the market, and now it's forming a base on top of a base. I tend to have a lot of success with this, but again, this is just me. Obviously, you have to take your own trading into consideration. I have a look at the financials, probably looked at it before. Not doing well quarterly, not doing great on an annually basis either. So I typically tend to stay away from companies that aren't growing their revenue. I'd probably like to do a bit more research on this company before I do anything. But for those of you who just met pure momentum traders, then this is something to add to your watch list. Next, I have MAD or Matter Group on the chart. This has formed a cheap base. I mentioned this last week, how we have a breakout here, and it's immediately pulled back down to this area here. Now, what I suspect is the traders who bought in here probably would have had their stop loss down here. So it's come out here, gone down to a stop loss area, and it's faded it as well. It looks like it's come down to this supply zone here, filled their orders because there was a fair bit of liquidity here clearly. It faded it, came straight through, right back up. Demand's clearly come back in, pushed it back up. Now it looks like it might be looking for that actual breakout, and all these people who bought in here that were faded, liquidated, they're probably most likely going to come back in, pushing that in to break this resistance area here. We'll see. MGX, similar to the chart I showed before, a lot of people would have bought in on this breakout here. It faded that area, come down here, liquidated a bunch of people, filled their orders, and looks like it may be breaking out to here as well. So the success of this stock's largely going to come down to the price of iron ore, so you will need to be watching that as well. I believe people typically get the iron ore price from the futures over in China. CIA, another iron ore stock, forming a base on top of a base here. This one has barely pulled back to its 21-day moving average. Until I see this break down and start heading lower, I still have a positive outlook for the prices of iron ore at the present moment. Definitely will be watching this one. If I go down to a smaller time frame, it's basing quite nicely, so I'll be watching this one very closely. DRO, Drone Shield, did fade previous highs here as well, so not the best sign. Has pulled back, hasn't been able to get past its 21-day moving average, so I'll still be watching this. Given if I go down to a smaller time frame, it might give me a better clue. And it certainly has. This right here is not the best sign. Now, it could very well be wrong, but you think about this. This is clearly selling, a lot of volume going right down. And rather than being met with demand, which typically would happen when it comes down to the moving averages like it does here as well, for example, and here, it's just sat here idle. What this potentially suggests is that there's not a lot of demand for this stock at these price levels. So any selling that comes in will likely push it down to the next demand level, which is around here. So we might see a further fade down here and hopefully the demand comes in here and it heads back higher. Again, this is just my own opinion. GTK still basing. I'll be watching this one very closely. Let me go down to a smaller time frame. This right here, so price moves up, volume goes up, and then as it pulls back down to the moving averages, price drops off. So this is a pivot point forming. If this breaks through here on volume, I likely will be looking to trade this one. BOE, Boss Energy, this one's leading the uranium market at the moment. If you're on anywhere in financial news or Twitter, you're going to be hearing a lot about uranium. I'll go over to my uranium watch list now. They're all doing incredibly well finally, but I will say, in my experience, there's at least one uranium pump every year. This may as well be this. I wouldn't watch this and think this is going to be the trend for the rest of the year. I certainly hope so, but given the track record that I've seen the past, 4 years that I've been actively watching uranium stocks, every year without a doubt, there's one big uranium pump. Everyone raves on about it on Twitter, and then given a couple of weeks, it's all coming back down again, and everyone's talking about the next sector. So keep that in mind when you're trading these. Don't just pile in and rush in because you see everyone apparently making money on Twitter. A lot of them are full of shit. I can prove that to you if you want. Just be mindful of this and just watch these. Wait for those pullbacks to demand areas and see the demand start to come in. Like you can see it here. They pull back, they have these large moves, they pull back to these demand areas, volume drops off. In this area here where it's pulled back and you see this tight price action like here and here, very low volume, no one's talking about it on Twitter. These are the areas you look to accumulate. Typically, I apply a strategy like this when I'm looking at a sector that is not necessarily a momentum area or a growth stock area, but it's an area where I believe that long-term is a good place to invest. An example of that might be, for example, gold. Now, I don't hold anything in gold, full disclosure, but if I had the opinion that I thought gold was going to appreciate over the long term, well, I'm certainly not going to be buying it when I see everyone rave on about it on Twitter. I'm going to be waiting for it to pull back to its moving averages, so it's 100-day, it's 200-day, and I'm going to wait for really low volume, really tight, narrow candles, and I'm going to look to accumulate these positions while it moves to the upside. And you can see that here, and I could pull up almost any uranium stock and it's going to do something similar. So this one here, usually a darling of the uranium market, it's pulled back to its 200-day, really narrow price action, no one's talking about it, and then you get these big gap moves like this, everyone's talking about it, and it's likely, given that, you're probably going to get some sort of a pullback while a lot of retail gets sucked in, unfortunately. NXL or NUX, so I talked about this last week. You had a breakout heading out to the upside. This is why you got to have good risk management. And what I mean by that, so let's say I was going to trade this one, which I didn't, but let's just say I did. I'll go down to a smaller time frame here. Here's a pivot point, very nice area to trade. Imagine I traded it, I would have bought in somewhere around here. My stop would have been somewhere down here. Let's just round it up to 6%. If I put my first take profit at 6% and I sell half my position, now if it goes up at least 6% and it heads straight back down, I'm going to be break even. You have to keep in mind, you can always re-add to a position. When you buy on a breakout, you've got maybe a 40% chance that it's actually going to work out. But if it manages to break out, hit your first take profit, which is going to be the same distance as your stop loss. It pulls back and demand comes back in, it bounces and heads back up. Well, now you've got a much higher percentage chance that this is actually going to play out and you can actually re-add. Where would you rather add the bulk of your position? When you've got maybe a 40% chance, or let's say something higher like a 50 to 60% chance? It's clear maths, it's clear statistics. This is how the more sophisticated traders tend to play. I'm not saying I'm one of them. I've definitely made millions of mistakes and I do it all the time. But this is just some things that have worked for me and I thought I would share it with you. And this is a great example of that. So anyone who would have just bought on this breakout thinking it was just going to keep going up, have been smashed right here. AMD looks like it's basing. I mentioned before that it barely pulls back, so it's gone down to its 21-day moving average. Any sort of pivot point that it forms and breaks out, I'll be looking to trade this one. PDD, so this is an American stock on the NASDAQ. It was basing here and it looked like it broken out, but look at the volume on the breakout. There was barely anything there, so it's clearly not in demand from the big money, the institutions. I won't be looking to do anything with this in the meantime. PARR, an American stock. You can see it had a nice base here, and anyone who would have been looking to buy in around here at the support area got liquidated around here, and then it comes back in that area before. This is all clear institutional playing, you can see it. So if I get a tight pivot point around here, I probably will be looking to trade that breakout. For those of you who look to buy at demand areas, you can see them right here. So this is where the demand's coming in, and you can see those fades as well. So you've got to be aware of all these things and how the institution, the smart money, plays the market, because they're the one that's going to be moving it around. Similar to VMC, the next stock I'm going to have a look at here. Over and over and over again, all right, look at this. Here is a clear support and resistance area. Hasn't been able to break this. You can call this a double top or a triple top, whatever you want to talk to. Anyone who bought here, stopped out here, liquidated. Anyone who bought within this area, stopped out here, liquidated. Look at these long wicks, these fades. Anyone who bought in around these areas, stopped out here, comes back up. Anyone who bought around these areas, stopped out, faded here. All of this is institutions at work. And when you get these small type pivot points, if it breaks out, I can assure you all these people who bought in there around here are likely going to see this, these big moves, these big gains, and pile back in. You've got to be aware of these things, and that's why I'm watching this one going forward. GHM has formed multiple trading bases, 1, 2, 3, 4. So therefore, I'll be watching this. Make sure that you watch and see historically how does it normally break out. So you can see it normally gets really tight and you get some long moves like this right before it breaks out. Have a look at the financials. I don't really know much about this company. It's doing quite well, so definitely one to watch going forward. BLX, Beacon Lighting, I've got that on the chart now. This purple area here, the reason why I've highlighted this is it's a clear distribution area. And what that means is every time price comes up to this level, it gets pushed right back down. So there's clearly a lot of supply at these levels. And you can see this long wicks here to illustrate that. Now I've circled this area here. You've got this wild move here. There's probably a lot of distribution that happened. And you can see there was an earnings announcement right around here. It was fairly decent by the looks of it, but it headed straight down lower. This is probably a situation where a lot of people were trying to liquidate or potentially even get in right before that announcement. So it does give you a clue as to what to expect next. And we can see here we've got a stage 1 base. We've got the left shoulder, a head right here, and a right shoulder. Then it breaks out, pulls back to that supply area, and then comes right back in and pushes up higher. Now, if I take a deeper look at this contraction that we're getting right at a distribution area, we've got a fade here right before our earning announcements as well. So price came back down and it's immediately come back up. This long wick here probably liquidated a lot of people who were already long, and also probably filled a lot of orders of people who were looking to get long. And now it looks like it's heading up to maybe even break out for this distribution area. So if it does manage to actually break through this, very strong sign for this company. If I have a look at the financials, it's not doing particularly great, but it is, I guess, a bit of a staple. It's an actual real business that is profitable as well. Next up is ESTC, an American stock I've got on the chart now. Multiple tradable bases here. You've got an inverse head and shoulders here, left shoulder, head, right shoulder, a bearish divergence on the awesome oscillator, which I do like to couple with the head and shoulders. It breaks out here, pulls back, forms a nice tradable base here, breaks out, gaps up on earnings. Must have been a very positive earnings as well, 51% increase than what they were expecting. And you've got a nice contraction here, pulling back to the 21-day. This is actually technically a higher type flag. I will be looking to trade this one. It is a US stock, so it's unlikely I will, given the time difference, but I will at least be watching it. If I have a look at the financials, and look at that, it's growing its revenue quite substantially. So over $1 billion in revenue, 11 billion market cap as well. Doesn't look like it's profitable though, so keep that in mind. There's definitely no earnings per share. I've got MRVL on the chart now. Looks like it's heading up to a distribution area. Could potentially be fading it as well. This was a very nice tradable base here as well. I'll be looking for some sort of a pivot point to potentially trade this company. Look at the financials. Doing all right on an annual basis, but quarterly recently hasn't been doing too well. So potentially it might not continue this growth. Let's see. COH or Cochlear, everyone knows this company in Australia has been in a significant uptrend and is forming a high tight flag, pulling back to the 21-day moving averages. You don't see this very often on the $20 billion market cap Australian companies. You really don't see this. You don't see this on the banks. You don't see this on BHP. So this is quite interesting. If I get some sort of a pivot point, a breakout of it, probably will look to trade it. Haven't seen it yet, so let's just see. But definitely will be watching this one going forward very closely. GLP, Global Partners on the chart now, in an uptrend, trading at all-time highs and forming a nice high tight flag as well. We'll be watching this one going forward, potentially looking to trade. Getting very tight as well. Volume's dropped off massively, so if you get that big breakout on large volume, it's definitely showing that there's a lot of demand for it and is worth trading if you're a momentum trader. I have a look at the financials, not the technicals. Not doing too bad either, so 18 billion in revenue. Hold on, did I read that right? Yeah, 18 billion in revenue, and it's got a market cap of 1.4. I have a feeling maybe the numbers might be off here slightly. Let me know if you investigate further. I'll have a look a bit later, but 355 million in net income and a market cap of 1.4. Very odd. I might have to look at this one a bit closely, I might put up their annual financial statement on the screen once I do my own research to see if I'm wrong or right on this. Well, not me, I'm not claiming it. This is TradingView's data. So let's just see. The next stock I'm going to look at is METC, which is an American coal stock. Like some of the charts I've shown before, you've got a stage 1 accumulation beige, which in other words is an inverse head and shoulders. You've got a left shoulder here, the head, and a right shoulder, while coupling that with a bullish divergence on the awesome oscillator. You get a breakout of that, this nice pivot point here, breaks out on large volume, pulls back to that distribution area, which is now a demand area. The demand comes screaming in. Look at the demand on this one, pulls back only to the 21-day, can't even get down to the 50-day, and breaks out right again. Then you get an actual nicer, longer base here, which is probably a bit easier to trade. Let me get rid of this indicator at the bottom here. Breaks out and again can barely pull back to its 50-day. Clearly there's a lot of demand to get into this company. It's a coal producer by the looks of it. Yeah, so yeah, coal mining. There must be something going on geopolitically where a lot of people want to get into coal. Obviously we've heard the narrative that China's stockpiling coal at the moment. You've got that whole situation with Taiwan. If they do anything, they're going to get cut off from the global economy. They're going to need those stockpiles of coal. I don't know. I'm not an expert on these things, but when it comes to trading momentum stocks, this has clearly got a lot of momentum leading the market right now. I believe coal, if you look at the entire market itself, all the industries involved in it, coal is leading the market right now. And then if you look at the leaders within coal, this company, METC, is actually the leader. So if you are the momentum trader, this is something that you at least need to be watching going forward. UTI, similar to what I showed before. So you've got a stage 1 base here, inverse head and shoulders pattern here, coinciding with a bullish divergence on the awesome oscillator. You get a breakout here and then a base forming on top of a base, breaks out, can barely even pull back to its 21-day, and now it's forming another base. So let's go down to a smaller time frame so we can see it a bit easier. So as price comes up, the volume goes up. As it pulls back down, the volume drops off, and vice versa as we keep going up here. So any sort of pivot point, which looks like this might be a very small one. Let me go down to the 1 hour. Yep, volume's going up massively. It's got a 94 RSI rating, so it's clearly a leader of the market right now. And as price is coming back, the volume drops off significantly. So if it does look to break out of this, I will be looking to trade it. But keep in mind, it's American stock, so I don't fancy me staying up at 2, 3 a.m. just to trade it. But who knows? Next stock I'm going to look at is NU. Formed a base here, broken out of it, based on top of a base, gotten very tight and broken out here. I have a look at the financials. Seems to be doing incredibly well. So 3.7 billion in revenue, no earnings, 43 bill market cap. Definitely want to watch this because it's growing its revenue, so there's definitely going to be demand for it. I'm not sure what the company does. What does it do? Digital banking. So you'd think every bank is technically considered digital banking, so maybe it does something different. Who knows? One to definitely look further into, but it is heading up into not all-time highs, but definitely 52-week highs. So I will be watching this, potentially trading it as well. I'll finish up with some crypto. So Ethereum hasn't really seen the growth that we've seen with Bitcoin, but it was forming a base and it has broken out and it's pulled back a little bit here, not even to its 21-day moving average. I'm more of a long-term holder when it comes to crypto. I don't particularly like to trade it just because you can't really look at it and see if there's revenue there or who's part of it or anything like that. I don't know enough about it to really trade it too much, but it has broken out and it is in a bit of a bull market at the moment as well. The last one I'll finish with here is INJUSD. This is a cryptocurrency, and look at this, massive uptrend. This is the exact kind of base that I like to trade. Pulls back on low volume to its 21-day, forms a nice pivot point and breaks out and heads up to the other side, and it looks like it's doing it again. Typically you could say this looks kind of like distribution, but it's barely gone down to its 21-day, and when it did, it immediately faded back up. I'll be watching this one. Unlikely I'll be trading it because it is a cryptocurrency. But if you are a cryptocurrency trader, and you can very easily pivot from stocks over to cryptocurrency, typically I like to wait for interest rates to be going down, which, like I discussed at the beginning of the video, might be happening in March, because I want to see people looking for riskier assets. That way I know that liquidity, that demand is going to be coming in for assets like this. Right now, if we don't get any sort of interest rate cut or some sort of terrible situation where people flee the US dollar and head to gold or Bitcoin or something, if that doesn't happen, well, these coins where barely anyone knows about them and there's no business and there's certainly no revenue, they all get smashed. So I like to look at stocks for that reason. But given what I said before happens or anything of that nature, then this will definitely want to be watched, because it looks like it's actually leading the cryptocurrency market at the moment. So for any of you who are interested in crypto, this might be one to watch going forward. That's it for this week. If you want me to cover any stocks or any other assets, whether it's a currency, comment down below. If you want me to go into a deeper conversation regarding some of my analysis or my strategy, let me know. I'm also happy to go into that as well. Thanks for your time. Speak soon.